Hi, this is George Alger, and welcome to today's segment of Our Ventura TV. Today we're going to be talking about the difference between home ownership and real estate investment. And our guest expert is Ed Knighton, who is a realtor and a real estate investor himself. Welcome, Ed.
Hey, George. Thank you for having me on the show today.
Great to have you. And let's just dive right in. So, what is the difference between home ownership and real estate investing?
You know, that's such a great question with so many people interested in getting into the market and getting into home ownership. There's many similarities, but yet differences between owning a home and investing in a condo or fourplex, or even a duplex. I did want to mention that, you know, we are in a very special state here in California in terms of property values and the peaks and the dips that the prices of our real estate takes through cycles. You know, that cycle usually is about 10 years when we'll have high prices and create a bubble, and then prices will come down.
Yeah, I am aware of the fact of that other places in the country do not have the big changes that we have here.
Yeah, we enjoy the roller coaster.
Yeah. And yet, I would think don't many people, I mean, as a realtor, do you experience the fact that don't many people who are buying a home to live in look at that as an investment as well?
Yes, they do. And that here in California, the value of properties, you know, over time go up. And people do make money in their equity in their homes over time in California. But to look at it as an investment, you're always putting money into your own home, as far as paying the mortgage, the taxes, of course. If you live in an area that requires HOA dues, you're putting money into that property. To have a true investment in real estate, the goal would be to pay down your mortgage completely, rent the property, and pocket the profits for yourself, so that you could go and even buy another property. Having multiple properties is the goal of many real estate investors. So you would have more profit coming into your pocket than outgoing.
So would you say a primary difference between a homeowner who may be, you know, looking at his investment in his own home as something that's going to give him a profit later, but a primary difference between a homeowner looking for a long-term gain and a real estate investor is a real estate investor is buying multiple properties and he's not living in...
Oh, yes, absolutely. And he's looking at it in terms of a business. When you buy a house, you want to make it a home. You want to fix it up. You want to, change the carpet. You're putting money into the home. Whereas an investment property, you want that property to pay you. You want the profits to be larger than the expenses, than the outgo.
I mean, that sounds like kind of an ideal scenario, but to play devil's advocate, I do understand that when you are an owner and renting out property, there's hassles, you know, that are attendant with that. You know, you got to fix the toilets, and sometimes if you don't pay the rent, I mean, how do you deal with that?
Well, you know, that deters many people. They say, I don't want to get involved with real estate. I don't want to be a landlord. And they simply don't invest in real estate. You have to look at the personality of the individual, because without a doubt, there can be hassles in real estate as an investor in terms of tenants and toilets. But those hassles, the rewards can outweigh those hassles tremendously. Property owners who have the personality to deal with people, to deal with profits, can be quite rich. So it is a choice of the individual. But what was your further question?
Well, you know, in terms of the hassles, okay, is there a way to deal with it? Okay, so great, the money can outweigh the hassle for many people, but are there ways that can, I don't know, make those challenges less
Yeah,
impactful.
yeah. Well, of course, you can be your own property manager, but there also are several management companies that usually charge 7 to 10% to manage the property. And that would mean showing the property, doing the fix-up, making sure that the property is rented, and dealing with all of the hassles of renting and keeping the property rented.
Okay, so not all real estate investors actually deal with tenants. Is that a takeaway here?
That's correct. That's correct.
Okay.
Some do and some don't.
Okay.
Yeah.
So the cost to have a property management service is around 7 to 10%. And would they actually work with someone who only has one property, or do you need to have multiple properties before
Yeah.
that's a reality?
Yeah. It depends on the management company. There are several management companies who are in competition with each other, but usually, even if you have one investment property, a management company would be happy to help you out with that.
Okay.
Yeah.
So we're talking about differences and similarities between home ownership and investment properties, but in terms of the timing of buying or selling, it would seem to me an investor is perhaps more focused on it, even though, of course, any homeowner who's selling a house wants to get the best value. But what thoughts or opinions might you add to this mix of, okay, if you're buying a house, I've understood, just buy it because you want to live there for a very long time, and the prices will eventually work itself out.
Mm-hmm. That can happen. But what you mentioned is the timing, and in real estate I like to call that the crystal ball factor. Yes, there's many statistics and many predictions, but we don't know because things happen politically, things happen economically that are out of our control and we can't predict. And these have forces on the real estate market. For example, like interest rates going up. Typically, if interest rates go up, the prices of homes come down. And recently we've seen prices of homes continue to rise. Now, to say how much homes are going to go down in price and when, it's very difficult for anyone to see. That's why a sharp realtor is always great to have on your side, but also to ask around, be checking the markets on the price to see the fluctuation of price, both for home ownership and for investment property. With investment property, you always want to make sure what the rents are, and rents are conducive to specific areas. How much are you going to be charging for rent? What are the comparables in your area? How much can you charge for rents? Does that rent cover the mortgage of that property? Okay.
Would you say then that the opportunity for an investment property is the price is less important if you actually can rent a property for a greater amount than the mortgage? Would that be a true statement?
Yeah, you would want to do that, or at least break even. Because think about it, if you buy a rental, you have a high mortgage, and then you rent it, and the rents don't cover the mortgage, who's going to be paying that? The rest of the mortgage is that the owner is, So you want to watch out for these things before buying an investment property.
Okay.
Yeah.
Of course, in our country, we have there's this traditional value of owning a house just from a point of view of being a homeowner. Okay. So switching back to that perspective, and also this emphasis on California, it's been pushed out of the range of many people's incomes. Okay. So what is your perspective now in terms of home ownership in general as it relates to people in California?
Yeah, it's a very true statement that the prices have skyrocketed so high, and that's why a rental market throughout California can be very strong. The demand for housing becomes very strong, and people need a place to live. So of course they're going to rent instead of buy. And as far as those peaks and valleys, as prices come down or a bubble breaks or pops, it could be a great time for new homeowners to get into the real estate market and to be a home buyer.
Okay. Of course, again, taking the devil's advocate perspective here, there are some who say that the increase of the housing prices has been so substantial that it might break in a more profound way. All right. So for instance, we have seen cases where people who buy at the top of the market, even if it's for a home, even if it's just for a home to live in, they'll walk away because they get so upside down. All right. So there's examples in recent memory where buying a home caused people some problems. All right.
Absolutely.
Would you say that, in spite of that, though, home ownership, in and of itself, it would still be a very positive thing for people to do, even if they were buying at a higher point in the market?
Yeah, great point. It is a positive thing, but it all depends on the individual. What's the individual's income? Are they self-employed? Do they have a very high income? Or what are their values? Maybe they have a high income and they want to rent. One of the advantages is if you have a very high income, you're able to deduct the interest that you pay on interest off of your taxes. What is the longevity of their career? Is it a right time for them to buy? Are they in the right stage of life to buy a home? Is it a family? Is it a single person? If it's a family, do they have two incomes to sustain a mortgage and the fix-up of the house? Real estate has a lot to do with the individual and planning.
Wow, okay. Well, we're just about out of time here, okay? So is there a website that viewers can go to for more information? And do you have a summating message for the viewers?
Yes, it'd be great to go to my website, which is knightonsaleshomes.com. And, the summating message is that real estate really can be exciting. And you have to know the business, you have to know the environment, the client, what's happening in your area when you purchase, because it could be exciting the other way as well. So it's been great to talk to you, George.
All right, thanks for coming by. This is George Alger signing off for this segment of Our Ventura TV. Until we meet again.